Now on Bloomberg Intelligence, Munis in Focus.
Today's Focus on Munis is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. It is that time. It is Friday. It means we talk municipals. It means we're going to chat with Eric Kazatsky, Managing Director and Client Portfolio Manager at MacKay Municipal Managers down there. He's down there in Princeton. Hey, Eric, we're coming up on the end of the year here. Give us a postmortem about the municipal bond market in 2025. How was performance?
Performance was really good down the stretch. I like to think of this year as really sort of a tale of two markets, right? So you had the client experience between January and let's call it late June, early July. And then you had the second half of this year, which was really a turnaround story. And returns have been overwhelmingly positive down the back half. And munis have largely outperformed the ag, which they get compared to a lot in client portfolios. So really good timing to be talking about things right now.
Eric, there was a lot of concern at the start of the year that munis were going to lose some of their tax benefits, and then that ended up not being part of the One Big Beautiful Bill. Mm-hmm. Has that concern completely disappeared, or is that something that could rear its head again at some point?
You know what? I think for us, it was never really something that we thought was going to come to fruition. But, it did have an overhang on the market the first half of this year. Right now, we're of the opinion that the tax exemption is going to remain. For us, sort of looking at the market organically, the ability for these local governments, especially now as they come into more fiscal stress, to borrow at cheaper rates and really subsidize the things that go on in everyday life, is really a bipartisan issue, especially when it comes to schools and local services. So we think it's going to continue to have support.
One of the areas of growth, obviously, in this economy has been AI. And on the data center side, how does a municipal bond market play in that, if at all, here?
Good question.
Yeah, so we actually had a visit from the strategist over at Barclays yesterday, and he was talking about this very subject. And he said on the corporate side, they're expecting like $2 trillion of new issuance solely going into that AI data center space. And he thinks a portion of that is going to find its way into the muni market. But look, as we saw this year, the muni market is willing and able to absorb more new issuance. So, as far as we're concerned, bring it on. The market's ready.
So he expects some of it to spill over into the muni market. How
Yes.
might that look? Where would that be most evident?
It's going to come on the IDR side, maybe some public-private partnerships. Some of it might come onto the utility side of the market. Really yet to be seen. We haven't seen any big name projects come online for solely building data centers yet, but that's how I imagine it would sort of shake out.
New issuance, the municipal bond market, as I understand it, had, as we were told by our friends at BAM Mutual, record issuance in 24, record issuance in 25. How about 26? What's the outlook?
Yeah, from what we're hearing now, by far and large, next year is going to be another year of growth on the new issuance side. So this year was a high watermark, even going back to the previous high watermark in like 2010. So, everything was well absorbed, a little bit of softness in the beginning of the year, some of it with the overhang of the question about the tax exemption and some institutional buyers sort of sitting on the sideline until they got some certainty. But that's really been ironed out right now. So I think the market's well poised to take on more issuance next year as well.
You sound positive for the muni market in 2026. If people don't have exposure to it, where are they most likely to give up some exposure in order to make room for munis in their portfolio?
Yeah, look, I think for us, the allocation to munis really serves a couple of different fold, right? So one, it serves as an uncorrelated asset class. So people who have corporate exposure, they can lower the standard deviation and have a satellite exposure to munis and bring their risk down overall, right? Because munis are uncorrelated, a lower historical default ratio. So they check a lot of different boxes. But if you're just looking at it from a straight yield advantage, as rates are coming down in the front end of the curve, munis are going to look very, very attractive on a tax adjusted basis, right? So people who are in money markets still, people who have bills rolling over, they should really take a harder look at tax exempts.
I have plenty of New Jersey municipals in my portfolio. I'm the largest private creditor to the state of New Jersey, I like to think. Eric Kazatsky, I call it the governor, and they pick up first ring. Eric Kazatsky, Managing Director, Client Portfolio Manager at MacKay Municipal Managers. I appreciate getting a few minutes of your time.
Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual.